Hi folks, it's Lisa Wells over at Waterstone Mortgage, sending you a video today talking a little bit about interest rates, the hot topic of lots of conversations that I've had lately. So you guys are out still looking at properties, and you know what? You've been pretty lucky. No snow, mild temperatures. I mean, knock on wood, you've had a pretty good winter viewing season. So hopefully we'll have some snow for the Christmas season. So keep looking because I think it'll get snowy at some point, hopefully. With regards to interest rates, so the Federal Reserve is meeting on December 16th to review interest rates. If they raise interest rates, they are raising the prime rate of interest. The prime rate of interest is what affects home equity lines of credit. It affects car loans. It affects personal loans. It affects credit card loans, recreational vehicles, anything like that. That would be a variable rate. That interest rate then is potentially going to move. So how does that affect home loan rates? At this point, you have seen our interest rates go up here in the last few weeks. It is because the Federal Reserve has come out and said they are 80% certain that they are going to raise the interest rates. We then, the mortgage division or the mortgage world has then decided to increase those interest rates a little bit because they are assuming that the government is going to raise those interest rates. So it's, in my opinion, the interest rates that we have now already include a rate hike in December. So I don't anticipate the world ending December 16th after the Federal Reserve meets. I think our rates are going to be relatively flat through that. However, it does depend a little bit on what the Fed commentary says. If they say that the market is really cooking and really doing well, it might then cause our interest rates to go up even further. Because if our economy is doing really, really well, the worst thing that we can have is inflation. And so then the Fed will increase rates more quickly, which will cause our rates to go up faster. So I think what's really going to be important is not the rate hike in December. It is going to be the verbiage that the Federal Reserve talks about, because that's going to set the precedent for what the first quarter is going to look like. And I think right now we're pretty safe in December, but as we start looking into the first quarter, depending on what they say in this meeting, we might see some additional rate increases first of the year. So again, no reason to panic, but certainly be out looking at properties. And if you find something, my gosh, let's get that rate locked in sooner rather than later. That's certainly always in your best interest. Guys, if there's any other questions that you have, anything else that we can be doing extra for you, please don't hesitate to let us know. We are here to help you and here to make sure that this process is the easiest and most efficient. If I don't chat with you, happy holidays. Have a great season with you and your family, and we'll talk to you soon. Thanks.